Good afternoon and welcome this afternoon to Market and Sector Analysis, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Cameron May. Cameron's a 20-plus year veteran of the financial markets. He's there to help answer your questions along the way. Last webcast for the day, last webcast for the week, and a great way to kind of wrap up what has been going on and maybe take a look over the horizon at next week to see what is on the news docket. And it's been kind of an interesting week for sure. Following last Friday's move to the downside and then the reaction there from over the course of this last week. So we'll see what has played itself out as we get into the end of the day. A little bit of time left in the market today, still about an hour remaining to go until the close. We're glad to have you, all of you, here with us, whether you're in the live version or whether you are in the recorded session. If you're here in the live version, be part of the conversation. Chat in with us. Cameron's there to help facilitate that. I'll watch for those questions along the way as well. And while I'm thinking about it, just a quick shout out to our great production staff, our great reviewing teams that do such a phenomenal job all week long in bringing all of this educational content to you and out there to the masses. So we're glad to have you with us and have you doing that. And thanks for joining us once again. So let's pop in here. A couple quick housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes only. Not a recommendation of any particular security or strategy or idea or account type or anything else. And we're going to be using the thinkorswim desktop software platform today, specifically the paper money version. It is not a guarantee of future success out there in the real world. However, it's a great sandbox to learn and play in. Remember that as you move your trading from live trading or from paper trading to live trading, there are some differences in the way that things behave. Fill prices might be different. Things to do with option expiration and assignment might be different. So keep those things in mind as you move your practice from paper trading to live trading. Now, remember, investing involves risk, including potentially more than your initial investment, especially when you're talking about futures. Now, when you talk about futures, and we're going to use some of the futures contract symbols today in this discussion, we're going to use them for market measurement. We're not going to use them as tradable instruments. If you want to learn more about that, I teach the futures trading webcast on Tuesday mornings. Look forward to having you join me for that. Remember that futures and futures option trading involves substantial risk, not suitable for all investors. So make sure that you understand those risks and characteristics. Same thing with options. If you're going to trade options, we're not going to talk about option strategies in this discussion, but just remember that option strategies and options require separate trading authorization. They are not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Past performance of the market is no guarantee of future results. We're going to look at a variety of different ways to evaluate the market, from probability analysis, fundamental analysis, technical analysis. All of those are theoretical in nature. None of those are guarantees as to what might happen in the future. So a lot of stuff going on, a lot of questions, I know. So let's jump over here to the thinkorswim desktop software platform. Just kind of take a look really quickly at what is going on still. Here we are in the S&P 500 index. And over the course of the last few days, we've kind of seen that pullback on Friday. Let's kind of zoom in here to see what's gone on. Pullback on Friday, back down to the 50-period moving average. We've got a couple of up days, a little bit of spinning top action, retesting that 50-period moving average. Gap up and a sell-off. Another gap up and a sell-off. Retesting towards that 50-period simple moving average. And then today, kind of coming in with a little bit of a gap down and a rally this morning as we get to the end of the week. What I want to do really quickly while we're here on the S&P 500 is I want to bring this down to a shorter term time frame. We're going to take this down to a 5-day, 5-minute candle view and kind of see where the momentum is existing at the moment. You can see that the RSI, that relative strength index, a momentum gauge, if you will, has been pushing to the upside, not in the extreme yet. If you want to learn a little bit more about the RSI as a technical indicator, Cameron May, who's out there in the chat, has a great series of webcasts called Advanced Charting Techniques, where he breaks down a lot of different technical indicators, including the RSI, So if you want to learn a little bit more about that particular tool, I'll let Cameron put the link to his watch list, or excuse me, his playlist out there. But kind of throughout this day, I mean, as opposed to yesterday, almost in stark contrast to yesterday's movement, we're seeing the SPX continuing to move higher as we get towards the close, and we're just a little bit off of the close, just a little bit less than an hour off of the close. A little bit of sideways action going into this options expiration Friday, this options close. The kind of perpetuation of the government shutdown, which is weighing on the market a bit, but we're starting to see that rally back to the upside here and starting to see a little bit of momentum gain. Not big candles yet, at least not over the last hour or so, but some, once it starts to trend, some solid momentum up candles in the S&P 500. Let's take a look at the NASDAQ doing something fairly similar. And I think you could probably make the argument that we've got a little bit of a squeeze going on here, kind of a one candle wide squeeze. Pat Mullally and I used to call that the Cobra pattern. When we get this one candle wide, it's not really multiple candles from top to bottom of that pattern, but it usually occurs at the top or the bottom of an uptrend or a downtrend. Not a guarantee that you're going to see this as a reversal pattern, but that consolidation that's going on here is short in duration. It is obtuse in its angle, meaning it's got a very wide base and then it kind of narrows down, and it tends to break one direction or the other, generally in the direction of trend coming into the pattern. So we've got an uptrend coming into the pattern. It tends to break that direction, but it doesn't always. And it tends to initially break to those previous resistance levels. So a Cobra pattern like this oftentimes kind of plays out this perspective. It breaks out either to the upside, kind of looks now like a sigma, doesn't it? Kind of breaks to the upside to the top of that resistance, or to the downside back down to the level of support at the base of the triangle. Now that's a simple technical analysis perspective, but it really is kind of illustrative of kind of the likelihood. And that would make sense if we were assuming that this is going to turn into perhaps an ascending triangle with the potential for a breakout to the upside. If this reverses, however, comes back down to that level of support, that could be a head and shoulders type of topping pattern. So it's kind of in that impending mode of going up or down. That's the NASDAQ. Let's take a look at the shorter term time frame on the NASDAQ. 5-day, 5-minute candle here, and also rising as well, and some very strong momentum to the upside here. The Russell 2000, however, and if you were with me on I think it was Tuesday, and we were talking about this on Tuesday, the perspective here in this move, we're talking about this, I think, in the futures class, or in a couple of different places on the network for sure, but we saw a rally to the upside in the Russell 2000. I mean, a pretty strong move to the upside early in the week, kind of breaking out of that horizontal resistance level. Now we've seen that reverse. One of the reasons why we've seen this reverse is the impact that has been felt across the regional bank space. And those regional banks fall in the Russell 2000 component segment. The Russell 2000 rebalances every June. We know that it's rebalanced in the last 2 years to a greater weighting to technology, but it still has a fairly substantial impact from those regional banks and the financials. And so the financials, a couple of those financial names in the regional bank space, Bank of the Ozarks, Zions Bank, which is based here in Utah, by the way, where we are, have had some impacts from bad loans. The question is that contagious across the rest of the segment, or is it simply a one-off or two-off indicator within those individual regional banks? And that remains to be seen as some of these other regional banks begin to report earnings and may have some additional impact. This is kind of that perspective of climbing the wall of worry when it comes to markets. markets. That wall of worry suggests that if there is something that is not absolutely perfect, that maybe the market over punishes some of these names. We'll take a look at some of those here as we get into this, but the Russell 2000 may be coming back down into a support level here, the RSI falling off a little bit. The other area that I want to look at really quickly as we get started in this discussion is what's going on with the VIX, the volatility index. Now, generally germane to options traders, but it is an indication of kind of uncertainty and volatility in the market as a whole in terms of movement. This is for sure the biggest spike that we've seen in volatility since that April pullback in the first part of kind of that tariff uncertainty that kind of unseated the market. So now we could make this argument that we're back down below that spike. So this is oftentimes, and I talked about this a couple of times this week, that when you get a big spike in the VIX, oftentimes it unwinds quickly. That's what we saw today, was a big variation in the VIX move. We saw a gap up and then a sell-off, if you want to think about it from that standpoint. It's not priced that way. The VIX is reflective of options prices, and in and of itself is not a tradable instrument. There are VIX futures, there are options on the VIX, but this is not a tradable instrument in and of itself. So it moves in relationship to the pricing of options on the SPX, in the money, at the money, out of the money over the course of the last 30 days. So we've seen that push to the downside. Heavy VIX move to the upside, or a spike to the upside, is met generally with heavy selling pressure across those options. And so it mitigates itself fairly quickly. And it's doing so now. Will it stay there? I don't know, because next week is another week. But going into this Friday, a big move to the downside in the VIX, despite the fact that, again, we go back to our index grid, and we'll go back to what was going on the S&P 500. S&P 500, but a correspondingly much larger move to the downside in the VIX. So I would argue, just from that relationship, and if we were to take a look at this kind of correlation, well, I got to go back to my VIX grid to do that. We'll go back to that correlation between those two. That's my middle chart here. We can see that we have market up and we have VIX down, which is back to that normal relationship, but you kind of see a bigger magnitude of downside move in the VIX than you see the upside move in the SPX. And that would suggest to me, as a technician and kind of making an anecdotal or somewhat causal assessment, that the market is still very bullish and not wanting to necessarily get caught up in that protective scenario here of having to buy protection, or at least selling off that protection pretty quickly. Same thing with the VVIX, as we saw the VVIX kind of coming back in here a little bit. And I've talked about this before. When we get a big disparity between the volatility of the VIX and the VIX itself, that tends to lend itself to a quick relapse of volatility back down to its mean. It's when you see that the volatility is climbing slowly relative to the VIX climbing slowly, those two are moving in conjunction with one another, like this time frame right here, that you tend to get longer, stronger, more durable spikes in the VIX. But when you get a spike of volatility, that tends to bleed itself off very quickly, because that tends to indicate that there was initial panic, and then the initial panic is kind of going away. And I think that's where we are at the moment, is that initial panic is kind of going away, going into this weekend as we see option cycles rolling off and those types of things, kind of seeing some of that initial panic that we saw earlier in the weekend on last Friday's move, kind of waiting to see what might happen. Now, that being the case, we're still in the middle of the government shutdown. And that seems to be persisting. And so the market is customizing itself, acclimatizing itself, perhaps, if you will, to that perspective. I want to pop over here to our Market Watch tab for just a second. I want to kind of see what has gone on today as we kind of narrow our view down. And I want to get a sense here, and then we'll take a look at the sector grid as well. Here's the S&P 500 on the heat map. And this is what this is telling me, is that overall there was a fair amount of green, there was a fair amount of bullishness in the market across some of the big names, the big drivers: Tesla, Google, Apple, Nvidia, MasterCard, American Express was up strongly. Walmart, ExxonMobil were across the board kind of green. Individual names, however, Oracle, Broadcom, Amazon, Lilly, Caterpillar, not doing so well in some of these areas. Yeah, I mean, this was a different picture this morning for sure. Kelly, you're absolutely right. This was a little bit different picture this morning. We were seeing that market down somewhat. And then it started kind of roaring back in some of these areas. But I mean, this is the thing. This is a pretty bright green, vivid red color on Oracle. I talked a little bit about Oracle this morning relative to their upgrade on the Schwab Network. Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. I talked about Oracle this morning being kind of on an upward trend and seeing a little bit of a double bottom off the 300 level. It's now down at 290, which is kind of at that support level that we had looked at, down a little bit more than 7% on the day. So we get that big orange. Eli Lilly, in conjunction with the semaglutide wars that are going on, Lilly perhaps taking the brunt of this. Novo Nordisk maybe seeing a little bit stronger movement, although that kind of falls in a different area here. Do we have Novo in here? I don't think Novo is showing up in here. We'll have to take a look at that really quickly. Broadcom, again, in that space. Caterpillar, interestingly, and I think this wipeout in Caterpillar is something that's really interesting because we talked about this. I talked about this yesterday in Short Verticals. I talked about it in a couple of other webcasts yesterday morning in the Trader Talks webcast about the kind of halo around precious metals and the miners moving, and the miners kind of getting hit today. So I wanted to kind of get a sense here. We'll jump into some of these sectors in just a minute, but I want to pop back over here to the chart, and I want to pop back to my single grid for just a moment because I want to use that as kind of my playground here. We're back on the SPX, but I wanted to look at /GC, and this is gold. Gold kind of taking a bit of some profit off of the table here for who knows what reason. Maybe hitting that big round number, the 4,400 level, with some selling pressure coming in at those big round numbers. That's not at all unusual, although this is the biggest red candle we've seen in gold in quite some time. So then the next question would be, what happens next? What's interesting, I find, is that this has long price discovery shadows or wicks or whatever you want to call them, top and bottom. And bottom kind of coming in at a bit of a support level right here, finding a bit of buying support back down here. So it wouldn't at all surprise me from a technical analysis perspective to see gold come back down a second day and test right around this 4190 to 4200 level as a support level before rallying higher here. Because if you think about it and you start to look at where a lot of the rotation certainly has been piling into gold. The opposition to this that I want to bring in is I want to go here to /BTC. Now, this is the Bitcoin futures contract. Again, virtual currency and cryptocurrency markets and futures and instruments are imbued with certain different risks because these are not legal tender. These are digital currencies. And so you have to potentially look at them that way. What I see going on here in Bitcoin, and I think this is kind of an interesting perspective, is a bit of an expansion pattern. No matter how you draw it, if we were to draw it just to those highs, wherever it draw it to make sense, those expansion patterns tend to be exhaustive in nature. In fact, sometimes those expansion patterns are referred to as exhaustion patterns because both buyers and sellers get exhausted. Buyers and sellers get exhausted because they're crossing a larger range as opposed to a consolidation like those triangles that we talked about, where their opinions are coming closer together in more consensus. With an expansion pattern, the opinions of buyers and sellers are getting further and further apart. So if we take a look at gold as an oppositional move to to Bitcoin or vice versa, that if Bitcoin's being sold off, where has that money been going? It's been likely going into gold as kind of that safe haven type of mode. And then if we get a rotation out of gold, where is it coming back into? We might be seeing a little bit of buying activity coming on the bottom here back into Bitcoin futures. And not that they are direct analogs by any means, in terms of storehouse of value, in terms of intrinsic value, any of those types of things. But they do sort of kind of function as collectively that alternative investment space. So we could maybe make the argument that there had been a big piling into gold, right, into /GC. And now a little bit of that's coming off, taking some of that profit off of the table after this big, long, strong gold run to the upside. Where is it rotating to? Well, rotating to some of those leaders, but not all of those leaders, but also perhaps rotating back into Bitcoin and maybe into ETH /ETH, which is Ethereum, kind of coming off of that bottom as well. That gap down, kind of hammer-like candle on both Bitcoin and Ethereum would suggest that maybe there's a little bit of buying going on in gold, or excuse me, out of gold into Ethereum and into cryptocurrencies. So keep an eye on that. That relationship may be something to pay attention to. Ether, not quite as exhaustive, maybe more of a rectangular consolidation than what we were seeing on Bitcoin, but certainly seeing some of the same efforts and activities. So the other thing I want to look at here really quickly while we're on this single grid space is /CL, kind of get a sense of what's been going on with crude oil. And as we get down to this level, again, down around the 56 mark, seeing a bit of a hammer candle. So I mentioned this yesterday morning, that this tends to be a little bit exhaustive. Again, we tend to see that push below levels, and we may see a little bit of a rebound, starting to see a little bit of that rebound right here in an area of support that we've seen before, right around this 56 to 58 level. Lifting costs, we've talked about lifting costs before. Lifting costs, the cost to get oil out of the ground, currently sit somewhere around the 61 to 65 range for a lot of the energy producers. Now, it varies according to region. It varies according to technology being used, whether horizontal fracking is being used or what might be being used. Offshore probably has some of the higher lifting costs. But when those are high, when those lifting costs are higher than where oil is trading, you tend to see, by nature, a slowdown in production. So we're at the point, though, where the EIA, we're not getting kind of that government data of oil production. So again, that's a function of the government's shutdown, slowdown, showdown, whatever it is. So we're still seeing kind of this push to the downside, which would indicate perhaps still that perspective of weakening demand and increasing supply. By the way, speaking of weakening or increasing demand, we've got a demand for a feedback survey there in the chat. Love to have you fill that out. It's a really quick survey. Cameron will repost that a couple of times. He's pinned that to the top of the chat box there. But it's a really easy survey to fill out. We have an open field question for you to leave comments. We've got a couple of numbers for you to fill out. Remember, if you love this webcast, really like this webcast, we'd like to have that 10 experience. If you hated it, absolutely, and you're never coming back, there's that one side of the spectrum as well. But that's your way of helping us to make these sessions better. By the way, the other way that you can help us is by clicking on that subscribe button down at the bottom of the page and giving us a follow. And we would love to do that, right? So, so that being the case, again, yeah, and Riceberg, good question. Yeah, break-even costs or lifting costs do change, right? They change over time in terms of the cost to get oil out of the ground and in terms of the technology involved. Fracking in a lot of places, in easy places like the Permian Basin, tend to be a little bit lower costs. Offshore tends to be much higher costs, and you take on the average, and that's where you get kind of that average production cost. So good question. I want to go back to, her name was Lola, little Barry Manilow going on there this afternoon. And while we're here, let's pop back over here to that /BTC. That gap to the upside, did that have anything to do, if we look at that July 10th gap to the upside, with this exhaustion? Not necessarily. I think that's a gap in the normal course of things, but it certainly existed at a level of resistance, and it kind of reinforces that level of resistance as well. Kelly, you worked at the Copacabana, or you worked in the Permian Basin? You worked at the Copacabana. Interesting. Did you? Okay, I'm not going to surmise whether you were a showgirl or whether you were, okay, anyway. So we'll stay out of that one. Let's take a look also at a couple of other things that are going on here. /HG in the copper space. Okay, worked in the Permian Basin. Okay, there you go. That's probably better than working at the Copacabana, even though it's, the hottest spot north of Havana. But copper futures have been a little bit more volatile in the last few days, kind of going sideways here, but we've seen a bit of up and downedness in terms of copper futures. And that's been, despite the fact that we've seen some of the impact to new housing and some of the demand for new housing growing as well. This is, I think, also a big function of energy infrastructure. Let's take a look at heating oil. And heating oil kind of coming back up a little bit, but it had been pushing to the downside. The reason I'm talking about heating oil here is, one, we're starting to see a shift in temperatures. It's now kind of that time of year when heating oil demand starts to pick up for domestic use. But it also is picking up for aviation use. And one of the major draws on heating oil as a distillate is the energy used by aviation. Heating oil is the proxy for jet fuel. And so as airlines like United, which announced its earnings earlier this week, suggest that they're increasing capacity because of demand, that would suggest an upward push on demand for heating oil. Delta, on the other hand, reducing capacity kind of tends to leave that alone a little bit, or maybe push that back down to the downside. So that's an interesting question. The other thing I want to look at here is, remember, this is not only the proxy for jet fuel, it's also the proxy for diesel fuel. JBHT in the trucking space, big move to the upside off of their earnings announcement. So the trucking space, kind of in that, kind of the line haul carrier space. Now, there are others in this space that may be reacting differently, but seeing a demand shift and seeing that push to the upside in terms of trucking, which hasn't happened for a while. We haven't seen a big move to the upside in the trucking space in a little bit. So this is kind of completing that maybe basing pattern for JBHT. If we take a look at some of the others in the trucking space, ODFL, Old Dominion Freight, not yet seeing it, but their earnings announcement is over the horizon, just about a week or so here. SAIA is the other one in terms of that space that has been gently climbing and into that earnings announcement as well. ODFL and SAIA both are LTL carriers, less than truckload carriers, and the expectation would be that as we start to see some of the impacts to tariffs coming home to roost, that these are going to be impacted by that because as companies kind of break down their loads that they ship, that either might increase demand for these LTL carriers or it might put pricing pressure on these LTL carriers. So it's going to be an interesting thing to see and maybe to listen to some of these earnings and calls for these LTL carriers as they specifically detail some of those impacts from the tariff impacts. So before we get too far down these particular areas of the market, I wanted to kind of take a look at what's going on in the sector space, and then we'll come back and we'll look at some additional individual names within this space. So I'm going to pop over here to my grid that is my sector index grid. By the way, this sector index grid is linked. The link to this grid is in the description for this webcast. So if you want access to this, This is a grid that I use in our market drive events, our one-day market drive events. By the way, we've got one coming up in Anaheim, California, the weekend before Thanksgiving, and we would love to have you be there with us. It's a no cost to you event. It's a one-day discussion of macro ideas and sector analysis. It's very much like this particular webcast, just over the course of an entire day with lots of guest speakers and food and a nice welcoming and reception afterwards, and we buy you lunch and all of those things. And so it's a lot of fun. Plus, it's in Anaheim. You're in the shadow of the mother park of Disneyland. Ricebird's question, yeah, will I be leading the virtual workshop next week, the Advanced Options Virtual Workshop? And the answer to that is yes, I will be. And I'll show you where to find that here in just a minute. But let's take a look at what's going on kind of across the board here. This is the grid view. And from this, we can see that blue line, the 50-period moving average on these various areas. Materials kind of going flat, energy kind of going flat. Industrials rolling down just a little bit, although seeing a little bit of pickup with that big move in JBHT and others in the industrials. Consumer discretionary, the first one, still rocking and rolling, at least at the moment, until we get into some of the discretionary earnings announcements this quarter. Consumer staples, a bit of a change, and we're going to come back to that one in just a moment. We're going to come back to that consumer staples in just a second. Healthcare rotating higher here, kind of that gap up, rally, pullback, and then rally again. Financials seeing a little bit of a push below that 50-period moving average. Infotech staying right there. Kind of we've already detailed some of that move in the NASDAQ. Communication services right along with it. Utilities starting to see, this is where I kind of get that perspective of gold and a shift, maybe a rotation out of what has been hot, because utilities have been mirroring gold quite a bit. Not that there's any real correlation there other than the fact that that's where the investment, that's where the risk on effort generally has been in utilities and into gold. And now starting to see a little bit of profit taking utilities. Real estate still pretty much flat. So let's do this. I'm going to pop into each one of these cells. We'll take a look at what's going on. Energy just kind of holding its own down here. And below the 50-period moving average, not really bullish, not really bearish, still trending higher. Overall, if we were to look at that overall trend, still making higher lows. Materials doing kind of the same thing. And a lot of that has to do with the weakness in crude oil and the weakness in things like construction and industrial rotation. But at the same time, this has a potential, materials has a potential to really kind of start rotating back higher if the onshoring of manufacturing comes into play, because materials are going to be needed to build the data centers and the energy resources that are going to be needed. Industrials, same thing, kind of seeing a little bit of that squeeze here, but really riding that kind of sideways trend overall. Not seeing a big push to the downside, seeing a little bit of a pop today on the heels of JBHT and a few of the other industrials. We're early in the earnings season for the industrials. So as we see some of these others coming into play, that may give us a better read on the industrials. Consumer discretionary still holding up, but this is where there's maybe a chink in the armor potentially. And that is the fact that we have some of the pay over time providers, the Venmo, PayPals of the world, the Squarespace of the world, the firms and so forth, and Ally and others that may be reporting a little bit of weakness in that space. And when they say weakness, demand for them would indicate weakness for the discretionary sector, because as consumers rotate to the pay over time model, that may be an indication of weakness in the consumer sector, because those tend to be short-term funding solutions. Generally, and again, this is where we get into some of the credit card processors and so forth that kind of cross this line, kind of blur this line between discretionary and others. I would also argue that the airlines are a pretty good read on consumer discretionary as well. United Airlines, pretty good discretionary or pretty good indication of demand. Delta Airlines, on the other hand, again, that indication of reduction of capacity. Now, I will tell you this. I've been on a lot of airplanes in the last 2 or 3 weeks. As some of you know, I travel a lot, and airplanes are not empty. There is still a lot of demand there, but will that persist through this holiday season? That remains to be seen. All right, we pop over here again into consumer staples. And this is the thing that I wanted to talk about, is the fact that, we mentioned this a couple of weeks ago, the fact that when consumer staples was above this support level, or excuse me, when consumer staples was below this support level, that was really a pretty solid indication that the market was kind of risk on, looking for growth opportunities, looking for opportunities that were not defensive in nature, that were more aggressive. Now, look at what has happened in the last week or two, maybe the last week specifically, to consumer staples, is that in the last week, we've seen a break back above that support level on consumer staples. We've seen a push today above, and a theoretical close, we're a little bit away from the close, a theoretical close above the 50-period moving average here. That would suggest that the market getting a little bit more defensive, not defense stocks, but defensive, those things that people have to buy, a little bit more risk off, which would go along with what the VIX is doing, or what the VIX was doing. So it'll be interesting to see if this continues to persist higher, if there is some rotation into consumer staples away from the consumer discretionary as we start to see some of those financials. Healthcare, a little bit of a bull flag type of mode there, a big bullish engulfing candle today, again, on that semaglutide wars that are going on. Financials kind of came back a little bit, but never broke back up a bit above the midpoint of yesterday's big red candle. It was triggered kind of by the financial, regional banks were the primary purveyors of bad news in the financial space yesterday, and really kind of the cause of that push to the downside. We'll take a look at those, a couple of those here in a minute. Infotech just kind of rotating along, much like the NASDAQ was. Same thing with communication services, rotating along. Utilities, on the other hand, maybe that was flashing that precursor to precious metals. Starting to see that pull back a little bit here. We'll see if that rotation kind of comes back, if this becomes a bull flag. And then real estate just going sideways here, although some strong movement in the last week to the upside. And by the way, speaking of just kind of going along, Cameron's doing a great job going along, reposting that feedback survey out there in the chat. So do me a favor, fill that out and let us know what you think about this particular webcast. All right, let's do this. I want to pop back over to that Market Watch tab for just a second, and I want to drill down into a couple of different sectors. Specifically, in this particular case, the financial sector. And as we start to look at the financial sector, I'm going to go down into the subset of the banking sector. JP Morgan, kind of neutral today, not really moving. Wells Fargo, not really moving. Bank of America, recovering from a push to the downside yesterday. Citigroup, Travelers and others, kind of a stronger move today. But let's go down to the subset. Let's go down to regional banks. And regional banks that exist within the S&P 500, Truist, M&T, Huntington, Citizens, and Regions Financial. These are the larger of those regional banks. They did okay today. The credit card processors, the credit card issuers, if we go back to financials and we look to, say, for instance, the American Expresses of the world, and some of those kind of blur those lines, but look at Visa and MasterCard doing well here in that financial services space. Even PayPal coming back from the big fat finger stablecoin issue that they had a couple of days ago, recovering fairly quickly. It'll be interesting to see what happens in that particular space. But what I want to do is I want to pop back over here to the Russell 2000. This is where some of that impact started to come in terms of those financials. So you notice how many smaller banks are incorporated in the financial segment, the financial sector within the Russell 2000. So if we break this down even a little bit further into banks, and we start to break that down into the regional banks, this is why I say those regional banks have really kind of a big impact when it comes to the Russell 2000. And we've seen some of these regional banks getting hit pretty hard. Bank of the Ozarks yesterday, we saw Zions getting hit pretty hard yesterday. Now, though, by and large, kind of rotating back, which is interesting. That these regional banks kind of taking that rotation. So that's what I wanted to kind of drill into. If we go back to the charts, let me go back to my single grid here. And I know we're kind of running up on time here just a minute, but I wanted to take a look at this. If we take a look at Zion, you see that big push to the downside. This was a $60 million charge off on a bad loan that had about a $1 billion impact to market capitalization. And you got to think that that's, again, when we talk about the market climbing a wall of worry, this is what that looks like, in that this got over-punished, right? So John asked the question, does the length of this candle represent volume? It does not. It represents range of price movement. So this price yesterday in Zions Bank went from 52 down to 46 and then rallied back up a little bit. They got punished. They got taken out behind the woodshed and punished for that, maybe overly so. We see a little bit of recovery today in that space. OZK, Bank of the Ozarks, same kind of thing. Bad loan, downside push. They saw a gap down and a little bit of a rally here. So keep an eye on these regional banks as they start to move. Now, the other ones that I wanted to look at, Caterpillar, coming off just because of gold, coming off, I think, very likely. They've still got an earnings announcement out ahead of them. Goodyear Tire kind of going flat here. CMI in that kind of halo space, taking it on the chin a little bit here today as well from that gold rotation out of gold. So kind of an interesting space. But looking over the horizon, I want to do two things here. I want to go to our Market Watch tab, and I want to look at the calendar again here really quickly. And we're going to look at the calendar going forward for next week and just kind of get a sense, because we're really getting into the meat of those earnings seasons and the earnings announcements. So you can see going into next week, we've got a bunch of things that are going on a retail basis. We've got a bunch of earnings announcements. We're kind of getting into the big kind of drivers of those of earnings season. But if we go back here to things like Econo Day events for next week, let's kind of see what we've got. Now, this assumes that we get some reliable data, but we've got PPI from the industrial side. We've got some leading indicators. And again, leading indicators are not leading indicators. They just call them that so that people will listen to them. Theoretically, GDP and retail sales numbers we're going to get next week. Theoretically, CPI, theoretically Fed balance sheet. But the question is, how accurate is all of this information and all of these data points that come from the government sources when those government sources are not actively updating that information? So that remains to be seen. This could be a dearth of information. It could be a wasteland of information next week. So that is something definitely to pay attention to as we get into and start to look over the horizon. One thing I wanted to leave you with here today, however, is this. And I always like to do this. It's always some national day or another. So I thought I would leave you with this today. It is National Pasta Day. And so however you choose to celebrate based on your particular practices for celebrating National Pasta Day, you can choose how you're going to celebrate. But I had a selection here. We've got Noodles and Company right here that is really kind of treading water down here around the sub $1 range. It hasn't been moving very much. So you contrast that. There you go. Spaghetti tonight. Darden Restaurants. So if some of you are Olive Garden fans, Darden Restaurants giving us a big W pattern right there. Big W. Marzetti Pasta seeing a little bit of a pop here today on National Pasta Day. Not at all unusual there. PepsiCo, which is actually one of the largest producers of packaged pastas, I think the American Beauty brand falls under PepsiCo. But you're starting to see that move to the upside here. ConAgra, also producer. I think the Bertolli brand falls under ConAgra in that space. And ConAgra starting to move higher. And then Campbell's Soup, because, chicken soup has noodles in it. Noodles are pasta. And there you go. There is your National Pasta Day pasta stocks grid. If you want to learn more about the things that we do and the 30 plus hours of webcasts that we do on a daily basis throughout the week. We don't do 30 hours every day. That would be a little bit excessive considering there are only 24 hours in the day. But you can come over here to youtube.com @Trader Talks Webcasts. Just click on the subscribe button. You can search for topics, and you can always find us over here on Schwab Coaching. And speaking of Schwab Coaching, last thing I'm going to show you is this right here. If you come to the pillar that says live webcasts and virtual workshops, and you deselect webcasts, here is our upcoming, starting next Monday evening, Advanced Options Strategies virtual workshop. It is 4 nights and 1 beautiful morning where we do a question and answer period. We would love to have you cruise with us on the Advanced Options Strategies virtual workshop. It is at no cost to you. You can sign up for it right here. And if you have an interest in some of the advanced option strategies that we teach, we'd love to see you there. We're also going to be doing this live in Miami just before Christmas. So you can come down there and celebrate a palm tree Christmas with us at the Advanced Option Strategies live workshop. And join us also here for the virtual workshop as well. My thanks to Cameron May for helping out. My thanks to all of you for joining me. Have a great weekend, everybody. Remember to fill out that feedback survey. Remember to give us a follow here on our YouTube page, and we will see you back here again Monday morning. I'm going to be on Monday morning with Ray Kimbrell on Trader Talks in Today's Market, and it's a rare treat. I don't often get a chance to talk with Ray Kimbrell on camera at the moment, so it's a good opportunity for you to get to know Ray and how he trades, and he's on our webcast or our workshop team as well. So we'll see you then. Have a great weekend, everybody. Take care. Bye-bye.